You've probably seen the name pop up in your feed, right? BlackRock. It's often at the center of these huge conspiracy theories. You know the ones, about a shadowy company with its hands in everything, secretly pulling all the strings of the global economy. It's a wild story for sure, but is it true? I mean, does one single company really own and control everything? Okay, let's actually get into it. Because the reality is way more complicated and honestly, way more fascinating than any conspiracy theory. To even begin to understand BlackRock, you have to wrap your head around its sheer size. We're talking about a company that manages roughly $11.5 trillion. Now, to put that number in perspective, if BlackRock were a country, its economy would be the third largest on Earth. Only the US and China are bigger. A number like that is just staggering. And it's why we have to ask these massive questions. So, to really get to the bottom of all this, we need to start with the most fundamental question of all. What does BlackRock actually do? Okay, this right here is the single most important piece of the puzzle. BlackRock is an asset manager. They don't actually own those trillions of dollars. That money belongs to their clients. And who are the clients? Well, they're pension funds that manage your retirement, they're governments, they're insurance companies, and yeah, millions of regular people like you and me. BlackRock's job is to invest that money for them. They're the custodian, not the king. So how did it become this financial titan? Well, it wasn't some grand plan from day one. The company's story was really forged in the fires of a huge failure and a global crisis. The whole story really revolves around its founder, Larry Fink, and his obsession with risk. See, back in 1986, he made a bad trade that lost his firm $100 million. That painful lesson became BlackRock's DNA. He built the company to make sure that never happened again. And that laser focus on risk, it made them the go-to experts during the 2008 financial crisis, when the US government was desperate for someone to help clean up all those toxic assets. That moment cemented their influence, and just a year later, they bought the iShares business, which made them the biggest manager of ETFs, exchange-traded funds, in the world. Okay, so let's pop the hood on this thing. How does this giant actually operate? It pretty much boils down to two main strategies and one incredibly powerful piece of tech that holds it all together. On one side, you have passive investing. This is the engine behind that huge iShares business. The goal here isn't to be a stock-picking genius. It's much simpler. You just buy all the stocks in a big index, like the S&P 500, and your investment just matches the market's performance, all for a super low fee. Then you've got active investing, which is the more traditional Wall Street movie stuff, where managers try to pick winners and beat the market. It's more expensive and, frankly, really hard to do well consistently. The explosion in low-cost passive funds has been the rocket fuel for BlackRock's growth. But BlackRock's real ace in the hole, its secret weapon, is a technology platform called Aladdin. You can think of it as the central nervous system for a huge chunk of the global financial world. It's this massive network that's constantly analyzing risk on trillions of dollars of investments. And get this, it's not just for BlackRock. Hundreds of other banks, insurance companies, and pension funds pay BlackRock a ton of money to use it too. It's an incredible competitive advantage and a massive business all by itself. Okay, so we've established they don't own the world, but that doesn't mean they aren't powerful. And this is where we get into the real heart of the debate, the critical difference between control and influence. So where does that power come from? Well, because BlackRock is investing on behalf of millions of clients, it ends up being the single biggest shareholder in thousands of public companies. We're talking about giants like Apple, Microsoft, Amazon, you name it. And when you add in their two biggest rivals in passive investing, Vanguard and State Street, you get what they call the Big Three. Together, they're the biggest shareholders in most of the S&P 500, and that gives them a huge amount of say in corporate decisions, from who gets to be CEO to company strategy. And this is exactly where things get really controversial. Back in 2020, Larry Fink used his very influential annual letter to CEOs to make a huge announcement. He said that BlackRock was putting sustainability at the heart of its investment strategy, arguing that climate risk is investment risk. It sent a massive shockwave through the corporate world and basically launched the whole ESG boom. The move was praised by many as the beginning of a green revolution in capitalism. But when you look a little closer, the picture gets a lot more complicated. Was this a genuine push for change, or was it just some really, really good marketing? So how did this whole ESG thing blow up so fast? Well, the day after Fink sent that letter, BlackRock quietly and automatically added its main ESG fund to the model portfolios that thousands of financial advisors use. But here's the real kicker. Investigations found that ESG ratings often don't measure a company's impact on the environment. Instead, they measure the environment's potential financial risk to the company. And that little detail is how you end up with fossil fuel giants like ExxonMobil in a top ESG fund that, you guessed it, charges higher fees. Maybe the most powerful critique came from a guy on the inside, Tariq Fancy, who used to be BlackRock's own chief investment officer for sustainable investing. Said he left the firm because he believed the ESG movement was, in his words, a dangerous placebo. He said it just creates the illusion of doing good, while really just helping Wall Street make more money from higher fees. So all of this brings us right back to our original question. After digging through all of this, what's the final verdict on BlackRock? Let's just be super clear about one thing. The idea of Larry Fink sitting in some smoke-filled room with a handful of other people deciding the fate of the world, it's a myth. It makes for a good movie plot, but that kind of direct top-down control just isn't how the financial system actually works. The reality is much more nuanced. BlackRock's power isn't about control. It's about immense, systemic influence. That influence comes from its sheer size, which is big enough to move markets. It comes from its voting power in thousands of boardrooms. It comes from being the company that governments and central banks call during a crisis. And it comes from its Aladdin technology, which is woven into the very fabric of the financial system. So, no, BlackRock doesn't control the world, not in the way the conspiracies say. But, and this is the big question we're left with, in a deeply interconnected global economy, is having that much concentrated influence in the hands of one company any less powerful? And what does that really mean for the rest of us? Now that is the real $10 trillion question.